Have you ever stopped to think that the secret to achieving financial freedom isn't about how much money you earn, but rather how you think about it? Well, the psychology of money challenges many traditional beliefs about wealth and retirement. Believe it or not, many wealthy people are not truly happy, while many with modest incomes live with peace and financial security. It seems counterintuitive, doesn't it? But it's the plain truth. Here's the big truth, wizard. Understanding the psychology behind financial decisions can completely transform your life. It's not just about knowing how to save or invest, but understanding your own behaviors and emotions related to money. Imagine being able to build a solid passive income through dividends and finally retire knowing your financial planning is on track. Does it seem like a distant dream? We'll show you it's not. If you want to discover how changing your mindset can be the key to unlocking a future of wealth and financial freedom, you're in the right place. In this video, we'll explore the nuances of human behavior regarding money and provide practical strategies to apply this knowledge in your daily life. Get ready for an enlightening journey that could be a turning point in your financial life. After all, money isn't just about numbers and equations. It deeply intertwines with human emotions like ego, pride, and fear. You see, financial success often isn't just about technical knowledge, but about behavior. Many people struggle to achieve financial freedom not because they lack knowledge of investments or financial planning, but because their emotions and habits interfere with the process. For instance, imagine someone who avoids investing in stocks out of fear of losing money, thereby missing out on the opportunity for significant passive income through dividends. Each of us has a personal story with money, shaped by life experiences. This financial history can influence our decisions in surprising ways. Perhaps you know someone who, despite a good income, can't save for retirement due to impulsive spending habits rooted in a deep desire to prove something to themselves or others. To change this, it's crucial to recognize these patterns and work to alter them. This not only improves financial management, but also paves the way for wealth and financial freedom. Furthermore, discipline and consistency are often keys to financial success, qualities that are sometimes lacking due to the emotions we mentioned. For example, solid financial planning involves not just saving but also regular investing despite market fluctuations. Over the long term, those who follow this strategy tend to reap the benefits of compound growth, leading to a comfortable retirement. Therefore, understanding and controlling emotions related to money is an essential step toward achieving a life of financial freedom and lasting wealth. A person's attitudes toward money are heavily influenced by unique life experiences they have undergone. Someone who grew up in an economically uncertain environment, for example, might have a cautious view of investments, preferring the security of stable savings rather than risking in the stock market. Conversely, those who witnessed periods of prosperity and high returns may be more willing to take risks in pursuit of greater rewards. These financial behaviors are almost like DNA, shaping how we deal with money, wealth, and financial planning throughout our lives. Consider a practical example. Someone who experienced rampant inflation during their formative years may have an exaggerated fear of losing purchasing power, prioritizing investments that offer inflation protection, such as real estate or inflation-linked bonds. In contrast, someone who has always seen the stock market as a growth engine may opt for dividend-paying stocks, aiming to build a robust passive income. These different perspectives demonstrate how financial DNA influences retirement planning and the pursuit of financial freedom. The economic environment in which we grow up not only shapes our attitudes, but can also define our financial goals and strategies. Someone who witnessed the collapse of large companies may be more skeptical about corporate investments, whereas another who saw exponential growth in companies like Amazon and Apple may be more inclined to invest in promising startups. Therefore, recognizing these influences and working to understand their impact on our financial decisions is crucial for developing a balanced and successful approach toward long-term wealth and financial security. The power of compound interest is one of the best-kept secrets in the financial world. Warren Buffett is a living example of how consistent, long-term investments can generate extraordinary wealth. He started investing at a young age, and today, much of his wealth comes from the compounded effects of decades of investments. Consider this. Every dollar invested can multiply several times over the years, turning a small amount into a fortune. This is the essence of financial freedom, allowing your money to work for you. To illustrate, imagine a person who starts investing $1,000 per month in a stock fund with an average annual return of 8%. In 30 years, this investment could grow to over $1.2 million, thanks to the power of compound interest. The secret is to start early and be consistent. Whether you're saving for retirement or creating a passive income source, compounding can be your greatest ally. It's one of the pillars of effective financial planning, ensuring that your money grows exponentially over time. However, compounding isn't just about time and invested money. It's also about patience and discipline. Market fluctuations can be discouraging, but those who hold on to their investments despite temporary downturns are often rewarded with significant gains in the long run. Warren Buffett didn't become one of the richest men in the world by luck. He understood the power of compound interest and applied that wisdom with patience and persistence. Therefore, the key to building wealth and achieving financial freedom is to start investing as early as possible and allow time to work its magic. Despite long-term financial improvements, people tend to focus on negative news. It's natural to fixate on sharp market declines because they have an immediate and visceral impact on our emotions. However, this pessimistic view can lead to hasty financial decisions, such as selling stocks during downturns, thereby missing out on potential recoveries. Financial freedom isn't achieved through impulsive reactions, but through a well-planned investment strategy executed with patience. For example, during the financial crisis of 2008, many investors panicked and sold their stocks, only to see the market recover in the following years. Those who held on to their positions or bought more stocks at low prices ended up reaping the rewards of that recovery. It's important to remember that, although bad news grabs more attention, history shows that markets tend to recover and grow over time. This perspective is crucial for those aiming to build a solid passive income through dividends and long-term financial planning. Furthermore, the tendency to focus on the negative can be mitigated through financial education and understanding market cycles. Instead of being guided by fear, an informed investor can focus on historical data and long-term trends. This not only helps maintain calm during periods of volatility, but also allows identification of investment opportunities that others may overlook. Ultimately, the key to achieving wealth and financial freedom lies in maintaining a balanced, fact-based view, rather than being swayed by momentary pessimism. In the world of finance, luck and risk often go hand in hand, significantly influencing the path to wealth. Take, for example, the stories of Bill Gates and Ken Evans. Both had talent and ambition, but life took different turns for each. Gates was fortunate to have access to a computer in his youth, a rare opportunity at the time that he fully exploited. Meanwhile, Ken Evans, his equally brilliant friend, did not have the same luck and faced personal tragedies that altered his destiny. This illustrates how luck can open doors while risk can close them. Understanding this duality is essential for any financial planning. When investing, we are always dealing with uncertainties. Some may hit the jackpot with a specific stock and see their investments grow exponentially, while others may face unexpected losses. That's why diversification is crucial. Investing in different assets can mitigate risks and increase the chances that luck favors some part of your portfolio. For example, in addition to stocks, including fixed income securities and real estate can balance your portfolio and provide a safer foundation for your financial freedom and retirement. Moreover, recognizing the influence of luck and risk reminds us of the importance of humility and continuous learning. Even the most experienced investors know they can't predict everything. Adopting a learning mindset, adjusting strategies as necessary, and being prepared for both good and bad surprises is crucial. This means not only seeking growth opportunities, but also being aware of potential pitfalls and preparing for them. In summary, balancing luck and risk, alongside sound financial planning, is key to achieving stable passive income and secure financial life. True financial happiness isn't necessarily about accumulating wealth, but about having control over your own time. Imagine having the freedom to decide how to spend your days without the constant pressure of financial obligations. That's the greatest dividend money can provide. When you have control over your schedule, you can dedicate time to activities that truly matter to you, whether it's spending more time with family, pursuing hobbies, or traveling the world. This sense of freedom is one of the pillars of true wealth. For example, Consider someone who achieved early retirement through rigorous financial planning and smart investments. This person no longer needs to work just to pay bills, but can choose projects that bring personal satisfaction. This doesn't mean money isn't important, but rather that it should be a means to achieve a greater end, time freedom. Investing in assets that generate passive income, such as dividend-paying stocks, can be an excellent strategy to achieve this freedom. Additionally, it's important to remember that having control over your time allows for a more balanced and healthy life. When you're not trapped in an exhausting routine just to earn money, you can focus more on your physical and mental health. Activities like physical exercise, meditation, and quality time with loved ones become more accessible. Therefore, when planning your finances, keep in mind that the ultimate goal is to achieve financial freedom that allows you to live fully and happily on your own terms. True wealth is, after all, living life on your own terms. In the world of investments, it's often a small number of significant events that determine long-term success. These tail events are moments that deviate from the norm and have disproportionate impacts. Consider the case of Heinz Bergeron, who made a modest investment in art and ended up building a collection worth billions. Or the trajectory of Amazon, which started as an online bookstore and became one of the largest companies in the world. These examples show how a few right moves can outweigh numerous small losses. For the average investor, this means that identifying and seizing these opportunities can be more valuable than trying to achieve consistent gains all the time. Imagine investing in a promising startup that, after a few years, becomes a tech industry giant. While many investments may only stay stable or even result in minor losses, that specific investment can multiply your capital several times over. This is the essence of good financial planning, being prepared for these rare but extremely lucrative events. However, relying solely on luck is not a strategy. The key is to be well-informed and diversify your investments. This includes not only stocks but also other assets like real estate, index funds, and even alternative investments like art collections or cryptocurrencies. By diversifying, you increase the chances of being well-positioned to capitalize on these tail events when they occur. Therefore, when seeking financial freedom and building wealth, remember that these uncommon events often make all the difference in your portfolio. Often, we confuse being rich with having true wealth. Being rich may mean owning luxury cars, huge houses, and other visible extravagances. However, true wealth is about unspent financial assets, such as investments, savings, and the ability to live within your means. It's the money you don't spend that truly builds the foundation for solid and lasting financial freedom. While many chase the appearance of wealth, the truly wealthy focus on accumulating and preserving their wealth. For example, someone may appear wealthy by driving an expensive sports car, but if that person is deeply in debt to maintain that image, they are not truly wealthy. In contrast, someone who lives more modestly but has a well-diversified investment portfolio and no debt is in a much stronger position to achieve financial freedom. This difference between appearing rich and being truly wealthy is crucial for any effective financial planning. Focusing on accumulating assets that generate passive income, such as dividend-paying stocks, is a smart strategy to build real wealth. Moreover, true wealth involves a significant degree of self-control. It means resisting the urge to spend on immediate gratifications in favor of investing for the future. It's about having a financial plan and diligently following it, even when it's tempting to spend. Those who can control their spending and invest regularly tend to retire securely and enjoy financial freedom that allows them to make choices based on their desires rather than their needs. Ultimately, true wealth is about financial security and the ability to live life on your own terms. Investing in the stock market is often likened to climbing a mountain. Just as a mountaineer faces challenges and uncertainties to reach the summit, an investor must be prepared to endure market volatility and risk in exchange for potential gains. This is the true cost of investing, not just the money invested, but also the willingness to withstand periods of losses and market fluctuations. Those aiming for financial freedom must understand that this journey involves accepting these oscillations as a natural part of the growth process. For example, during economic crises, many inexperienced investors may feel the urge to sell their stocks to avoid larger losses. However, those with solid financial planning and an understanding of market cycles tend to hold on to their investments, knowing that patience is rewarded in the long term. These investors recognize that market volatility is the price to pay for potentially high returns. Maintaining a diversified portfolio and focusing on the long term are effective strategies for navigating these periods of uncertainty. Moreover, it's important to remember that each investment decision should be seen as part of a larger plan. The real price of investing extends beyond just monetary costs to the time and effort dedicated to studying the market and monitoring investments. Like a mountaineer who meticulously prepares before each climb, a successful investor must dedicate time to learning, planning, and regularly reviewing their strategies. Embracing these challenges and preparing adequately is crucial for building lasting wealth and achieving financial freedom. In the relentless pursuit of wealth, many people find themselves caught in the hedonic treadmill, the constant chase for more and more without ever achieving lasting satisfaction. This concept refers to the human tendency to quickly return to a stable level of happiness, regardless of major positive or negative changes. Thus, even after reaching new income levels or acquiring luxury goods, satisfaction is often temporary. To avoid this trap, it's essential to recognize the value of knowing when enough is enough and to focus on meaningful and sustainable financial goals. For instance, someone might believe that buying a luxury car or mansion will bring lasting happiness. However, once the novelty wears off, this person may find themselves wanting even more: a more expensive car, a larger house. This endless cycle of desires can lead to financial and emotional exhaustion. To truly enjoy financial freedom, it's important to set clear limits and goals that promote not only financial growth but also personal satisfaction. Investing in experiences, such as travel or quality time with family, often provides more lasting happiness than material possessions. Furthermore, practicing gratitude and focusing on intangible achievements can help counteract the effects of the hedonic treadmill. Establishing a financial plan that includes realistic and achievable goals is crucial to maintaining the right perspective. This may include building an emergency fund, creating passive income through dividend-paying stocks, and preparing for a comfortable retirement. By striking a balance between financial growth and personal contentment, it's possible to break the cycle of the hedonic treadmill and live a more fulfilling and rewarding life. So, after delving into the complex and fascinating psychology of money, one crucial question remains. Are you ready to apply all this knowledge to your life? Remember, understanding alone is not enough. Action is required. What will you do today to start your journey toward financial freedom? Will you begin investing regularly? Review your financial plan? Or perhaps simply change your mindset about money? Consider this. Every small step you take today can lead to great rewards in the future. And if you haven't started yet, there's no better time than now. Don't let fear or inertia paralyze you. True wealth lies not just in numbers, but in the ability to control your own time and live life on your own terms. So, if you're eager to continue learning about achieving financial freedom and improving your relationship with money, subscribe to our channel and enable notifications. We have plenty more valuable knowledge to share, and we're here to help you transform your financial life. Let's embark together on this journey of growth and fulfillment.